Right, so welcome to the live stream today. Very much excited for having you. We are streaming on Facebook as well as on YouTube, and then some of you are joining us on the stream here on um, Zoom. So if there are any questions, this is a Q&A straight up going in for case study, and as well as the issue in relation to public sector accounting and finance. So if there are any questions you have, you indicate by raising your hand. I'll bring you on, and then you say what you have to say, or you ask your questions, and I provide you with some answers. Or you can also put it in the chat session on Zoom, and I'll be able to read your comments for you as well as reply any questions you are having. If you're watching on YouTube, put it in the chat segment. I will be reading all your comments as well as we go into the discussion. And on Facebook, I'll be doing same in that particular situation. So welcome. I see your comments coming in. I am writing PSA tomorrow. That is Katechie Hayford on Facebook said, I'm writing PSA tomorrow. Any guidelines for me, please? I'll be talking about guidelines sometime later on in the stream. So continue to stay connected. I'll be talking about that later on in the stream in that case. So if there are any questions, Katechie Hayford, you can put it in the chat and I'll comment on it. But the guideline issue, I'll be coming to that in a moment. I think my feed is baffling a little bit. Let's see if I can get it fixed. On YouTube, I see someone coming up, Yovala Ewua. Sorry if I don't mention him right. Forgive me, okay? I don't mean to sabotage your name or something like that, but forgive me for real. Ewua said, oh my God, this is my first time joining you live. Oh, that is nice. Welcome. Give us a thumbs up on the video when you join. Share the video. Let us reach a lot of students writing strategic case study and public sector accounting and finance. I'm going to share my thoughts on the pre-scene for the ICA May 2021 and also provide you with some guidelines on public sector accounting and finance and what exactly you need to look out for in that case. Hi, how is your evening? Yeah, Sharifa, I'm good and my evening is going on well. I hope that you are also having a good evening in that case. Please, what is the meaning of non-oil primary fiscal non-oil primary fiscal balance? Right now, when we talk about non-oil primary fiscal balance, we're talking about the issue in relation to, now there's a difference between fiscal balance and primary balance. So maybe let's start a discussion from there. Primary balance, it's there, and then there is fiscal balance. The fiscal balance is the same as the net surplus or operating deficits for the period under consideration. So the fiscal balance is simply when you prepare the statement of financial performance or statement of revenue and expenditure accounts, the surplus or deficit figure you get is what is called the fiscal balance. And that fiscal balance can be positive or negative. But when we say primary balance, the primary balance is simply the revenue minus expenditure excluding interest expenses, public debt interest expenses. What does that mean? It means that if you are looking for the primary balance, you take the fiscal balance, then you add back any public interest that has been paid for that period. So that is the difference between the primary balance and the fiscal balance. The fiscal balance is what you are having at the end of the day when you prepare the statement of financial performance, including interest, public debt interest. But if you are looking for your primary balance, you are saying that, okay, what is the operating position of the state or of the entity, assuming we are not paying public debt interest? That is what we call the primary balance. Now, the issue about oil and non-oil primary balance simply means that when determining the primary balance, we are not going to be including oil revenue. Okay, we're not going to be including oil revenue because there is an oil revenue that is included when determining the total revenue of the consolidated fund. Because as part of the petroleum fund, every year there is an allocation from the petroleum fund to support government in its budget operation. So when we say non-oil primary balance, we mean the primary balance excluding any oil revenue or any oil resources in that particular case. So that is what we mean by primary balance or primary non-oil balance in that case. So that is the distinction between that. That's the distinction between that. So there's a difference between the fiscal balance and then the primary balance. And that's the distinction that you need to understand in that case. Any other questions? If you have any questions, you are watching on Zoom with me, raise your hand. I'm going to bring you up so you ask your question, or you can put it in the comments in the chat on Zoom. I'm going to read it just like how Sharifa has put it there, and I'm going to read and reply to you. For those of you watching on YouTube, you can put it in the comment section. I'm going to be replying to all of your comments, or the chat session. I'm going to be replying to all of your chat in that case. And on Facebook, put it in the comment section as well. I'm going to be replying to all of that as well in that case. So let's see, what do I have here? Having some feedback coming in. Please, I'm streaming online, so if I have feedback on your background, that's why I'll mute you. So if there is anything you indicate by raising your hand, I'll bring you up so that I can control the sound we get. Yeah, good evening, Ebenezer. I hope that you're doing well. Welcome to the stream today. Let me share my screen with you because I guess there are a couple of things that I want to also write on my screen. So let me share my screen up in that case. Let's bring it up. Sharing. Let's see what we do. Coming up. What's that on my screen? Okay. Okay, Abigail Owusu coming up. Okay. Forget about what you see on the screen. I think that's for financial management students. Oh, I don't like this. Okay. So let me pull up YouTube. PSAF case study. Okay. All right, so fresh page up. Right, so I see some of you guys joining the stream. You are welcome. We are looking at public sector and strategic case study. If you have any questions, put it in the comment section on Facebook, the chat segment on YouTube, the chat segment on Zoom, or you can raise your hand and I can bring you up so that you ask your questions in that case. Remember that we are streaming as well online, so you got to be mindful of your background. If you have a lot of noise on your background, you don't want to unmute or notify me. You can put your questions in the chat so that we don't have a lot of noise coming in the stream. Nuhu said, please, I hope we will go through the ratios or interpretations, PSA. I'm not teaching today. I'm answering questions. So if you have any questions, you hit me with the questions, then we go. All right. Let's see. Ebenezer, someone is coming up with a question. Let me see if we can answer that real quick. Ebenezer said, please, what is net debt percent? I don't know the context of net debt percent, but the issue about net debt, it's simply the total interest-bearing debt minus highly liquid financial assets of the government, minus highly liquid financial assets of the government. So more or less like net debt will be equal to the public debt, if you want. Okay, the public debt minus usually cash and cash equivalent. Okay, minus cash and cash equivalent. That is what we mean by net debt. So the total debt stock of the entity under consideration minus the total, the public debt of the company minus the cash and cash equivalents. That is the idea about the net debt in relation to that. Now, when we say cash and cash equivalent, we're talking about, like I said, highly liquid financial assets. Okay, so if, for instance, we have some investments that can be converted into cash in the shortest possible time, it will be referred to as part of liquid financial investment in that case. So that is what we mean by the net debt of the country.
Nhyira,
Yeah.
Please, the question that I asked, I said net debt percentage. On one of the question in the question bank of Nhyira Premium, there's a question that is asking a ratio question, and the question asks that you should calculate net debt percentage, and that's the reason why I sent that particular message to you to let's say explain it, because it came as percentage. It didn't say net debt. So I want to know if it's like the question is a correct question, or maybe there's something on it.
Which question is that?
That's I'll post it on the platform right now, please, to you right now.
Okay.
Thank you.
Then what do I have here? Please, does that mean that if there is any oil revenue, you have to deduct it from the total revenue? Yes, it has to be deducted. Please, how is unretired interest treated in the books of an MDA? That will be part of their cash and cash equivalent in the statement of financial position. Doris Ehonam, please, what's the formula for capital asset ratio? Capital asset ratio. Let's see. What else do I have? Okay, you're welcome. So if there are any questions, you indicate by raising your hand, I'll bring you up, or you can put it in the chat segment in that situation, and I'll bring you up as well. Or I will read your comments in that situation. So let's see if I have any comments coming in on Facebook in that case. If you say, how do we calculate aggregate expenditure out 10? When you say aggregate expenditure out 10, it means total expenditure out 10. So that's going to be the total expenditure, the actual, minus the total expenditure, the budget divided by the total expenditure, the budget, times 100. That is what gives you the aggregate expenditure out 10 in that case. So that's how you calculate the aggregate expenditure out 10. So when you say aggregate expenditure out 10, you are referring to the totals of all the expenditure, actual minus the budget divided by the budget in that particular situation. Let's see, got a comments coming in here.
Nhyira?
Yeah.
Please, what of the aggregate outing? But in the question I have printed from your question bank, the question doesn't give budgeted figures. It's just comparing two countries.
What is the question? Send the question, let me see.
Okay. All right. I'll do that in a moment.
Let me see. Let's bring this up from here. Okay, so the consolidated financial statement, Okay. Okay, let me try to bring this to my top here, to my screen up here. Okay, so let's see. Additional information, the total market value of all goods and services, that's GDP. According to the statistician, that's the population. From the above given data, calculate gross debt. Okay, you got that there. Net debt percent. Oh, okay. So if we talk about the net debt percent, this is all that it means. The net debt percent will simply be equal to the net debt you're going to be having divided by the gross debt multiplied by 100. My space is exhausted there. So it's the net debt you get divided by the gross debt times 100. The idea is that this is trying to measure the percentage of your net debt of the gross debt of the organization, sorry, of the consolidated fund. So when we talk about the issue about net debt percent, then that is what we are talking about. So if it is just net debt, then it will be the public debt minus the cash and cash equivalent, or the most liquid, how do we call it? Most liquid non-financial assets, okay? But then if it is net debt percent, then you take the net debt divided by the gross debt in that situation. So that is how you go about that. That's how you go about that. Okay. So let's see some of you joining. If you have any questions, you raise your hand. I'll bring you up. Then you can ask on Zoom, or you can also put it in the chat for me, and I'm going to be replying to you in that situation. In that case, please, I've sent the question. Okay, I think I've answered your question, Ebenezer, and I hope that is okay in that case. So put in the chat box any questions you have for me. Those of you on YouTube, if you're on Facebook, put in the comment section as well. In that case, as we move ahead with our discussion. The gross debt is simply the total of all interest-bearing debt of the entity. The total of all interest-bearing debt of the state. That is what we mean by gross debt. I think somebody is asking about gross debt. So the total interest-bearing debt that we have is what we mean by gross debt. Okay. Question set, send. Let me check it out. Let's bring it up from there. It sends through where? Okay. Okay, downloading. So we go. Yeah. The total borrowings of government. Yes. I mentioned that as well. Let's see. Okay, so unfortunately, you just got my power taken. So that is why you heard the post, or you saw the post in that case. So I'm on an external microphone now, and I hope that it's okay. Maybe it may not sound as good as earlier, but I hope it's gonna be fine in that case. So let's see. So let's go back and pick some questions up real quick in that case. So if there are any questions, for those of you joining me on Zoom, if there are any questions, you bring it up, raise your hand and I'll bring you up. Or better still, you can put it in the chat if you don't want to talk, and I will be answering all of your questions in that case. YouTube, I see some comments coming up. I'm going to answer them as well. Some power situation going on with the Doomsaw 101. Let's see. Okay, so my screen is back up. Okay, let's see, what do I have here from Pearl? What does it say? Who is this? Let's see. Compute the following: aggregate outing, aggregate expenditure outing. Let's see the structure of the question. Country G and country N. Let's see additional information coming up in that case. Okay. When you say aggregate outing, I'm thinking that should be their fiscal balances respectively, because the word aggregate outing doesn't categorize anything, and you are just giving statement of. Is that a question? Don't you have any income statements coming in? Or you just sent me part of the question?
Let me just forward it.
Don't worry. Just tell me the page number. I have the book here.
Okay.
Oh, PSA. You don't have the page there and there.
Yes, it's scanned.
They will thank God. So let's see. Did you say the manual or the question kit?
No, this one is from your question bank.
This question?
Yes.
No, I don't think.
Let me just capture the first page for them to send it.
Okay. Okay, I think this is part of the questions that we looked at. Let me bring it up real quick, because aggregate outing will be on more or less like a fiscal balance. So I could just check out that for you real quick in that case.
Okay.
Okay, so I could just check that for you real quick, because the rest of the ratios are just there straight up. So aggregate outing, maybe I think it should be aggregate revenue outing. There should be an issue. I think the question was originally taken from the ICA public sector manual already. Okay. So if you have the manual, for some reason I can't find my manual. ICA public sector manual, I can't find my own. But I brought all these books home. I can't find my own. But the issue is because there's nothing like just aggregate outing. I mean, it doesn't make sense. It doesn't make sense like just aggregate outing. In aggregate outing, then we will assume that we are dealing with the issue in relation to the fiscal balance and the period. I'm having a lot of feedback. Oh God, what the heck is this? I think I'm gonna put some people in the waiting room. If your mic is on and I'm getting a lot of feedback. Alerts are coming up. Okay. Right, so that is the issue about that. So like I said, it should be aggregate revenue outing. That is what I'm thinking. But the original question, I'm going to put this in there.
Okay. Then this is the only part of the question that has been downloaded on your page.
Sorry, I think I muted you accidentally. So you can unmute and talk. Kelly can unmute and talk.
I'm saying that the question, what I have sent is, that's all about the question.
Oh no,
But
there is a part.
the
There
one
is,
that has revenue is also referring to something else.
there is a, I think that is not the whole question, because you see that it marks the continued. So there is an income statement so that
Okay,
you'll be
then it's
able
not
to
attached to what you have uploaded on the page.
possibly,
Yeah.
but it's a question from the ICA public sector manual. So if somebody has the ICA public sector manual, maybe the person can go to that page on their ratio, and can put it on the page for you in that situation.
Okay.
What are my questions again coming up here real quick? For those of you just joining on Zoom, if you have any questions, you indicate by raising your hand. I'm streaming on Facebook and I don't want noise in my background. So if you find out that your background is noisy, you can put your question in the comment section and I'll be able to read so that I don't have a lot of issues coming up in that case. Then let's see. So please do, can you touch on GIFMIS and IFMIS and their objectives? GIFMIS and IFMIS. Hey, you are seeing, oh, okay, oh, I'll come to that in a moment. Let's see, what else do I have here? Victoria Awupuli said, please, what is the difference between gross debt and public debt? They are used interchangeably. Gross debt is total debt of the country. Public debt is also total debt of the country in that case. But there are two schools of thought in their treatment. The issue is that one school of thought says if you are dealing with a gross debt, it means you are supposed to bring all the debts, both interest-bearing debt and non-interest-bearing debt. But the right thing is that if you are dealing with gross debt, it usually has to do with only interest-bearing debt in that situation. So these words could be used interchangeably in that case. These words could be used interchangeably in that case. I'm coming. Seeing a question here. Let's see if I can bring it up. In that case.
Hey, Nhyira, please, are you still sharing your screen?
Am I not sharing? Let's see. Yes. Oh, it's not sharing. Yeah, I'm still sharing my screen. Just that it's static. I'm not writing.
Because I'm just seeing your picture, so maybe I need to leave it and join again.
No. You can look for my profile and click on it. You should be able to get it coming up.
Yes, I'm doing that, but it's not coming up.
Okay, then go and come again. Sorry about that. Okay, so I see some hands up on Zoom. Let's see if we can bring them up. Yes, Abdul Alim.
Good evening, Nhyira.
Yeah, good evening.
Please, I'm hoping you can touch on the aggregate revenue outing. I also saw that question in the manual and I tried to compute it, but I don't know. It seems the one in the manual, the formula they are using, I don't get it. And I tried to compute it, but I'm not getting the answer they have.
The issue is that all the ratios in the manual, like the answers are given finally, but the process of getting the answers is not what is available. I don't know why I don't have my manual here. It's strange. Hold on, let me see if I'll get my manual. I should have brought all these things home, which I did because I have all the books here. Let's see. Because there is an issue slightly with that there is a way those figures are supposed to be derived in that case. Management accounting. Public sector accounting. Let's see.
And then, sir, please to add up to it,
Yeah.
the one we calculated in the class, I remember to get the percentage out, and you said we would use the actual minus the budget over
Budget.
the budget. But
Yeah.
when I look at the manual, they are, I mean, they've rather turn it upside. So it is
When you say
budget,
upside, what do you mean?
like they've, instead of the actual minus the budget, it is the budget minus the actual over the actual. That's the formula they have in the manual. But even that one, when you compute it, you will not get the answer they have in the manual.
It's budget minus actual over the budget. That is how we deal with outing.
Okay.
That's how we
Budget
deal with
minus
the budget
actual.
minus the actual over the budget. So that is how we deal with the outing in that case. Let me see if I can pull up my slide on public sector, the ratios we did. Let me see if I can pull it up real quick. That was section what? This is final section, our discussion there. Section 11, I don't think it should be there. This is PPE issues coming up here. Let's see. ERD. This is not it. Give me a moment. Let me pull up my ratios. Let me pull up my ratios here so that we could answer some of these questions real quick.
Nhyira,
Yeah.
please, the outing, is it the actual minus the budget over the budget, or the budget minus the actual over the budget? Please.
You could do actual minus budget or budget minus actual.
Both will still give you the same answer.
Just that in one way you will get a
You will be having
negative, in another way you get a positive, but it's about the interpretation. So for
Okay.
instance, if you're in the revenue, if you're dealing with say revenue and you do budget minus actual and you realize that you are getting a positive answer, what it means is that the budget is more than the actual. So if you're in revenue and your budget is more than the actual, that is unfavorable results there. I don't know if you get a picture. Because maybe you budgeted for say, let me see if I can write here. So maybe you budgeted for say, so let's say that your budget for revenue, maybe direct tax, it's whatever, let's say $10,000, and then the actual results coming in is $8,000. Now, if you do budget minus actual over the budget times 100, if you go this way, you're going to have something like 10,000 minus 8,000 over what? 10,000 times 100. Now, this is going to give you a positive percentage. Now, that doesn't mean this is a good thing, because you realize that we are not reaching our budget target. We are actually deviating from our budget by 2,000. So that will be an unfavorable variance in that situation. So you can do budget minus actual or actual minus the budget in that case. And let me also say this. We have the outturn in percentages and we have the outturn in absolute. You have to understand exactly what is going on. If you are dealing with the outturn in absolute figures, that is where you just bring in your budget minus actual or actual minus budget, whatever you do. Only that note that if you're in revenue and your answer, whatever method you are using or whatever approach you are going for, if your budget is more than the actual, that is a negative or adverse variance. But if you are dealing with expenditure and your budget is more than the actual, that is a good variance in that case, meaning that the government is not spending more. But even though government is not spending more, if you are doing an interpretation, it tells you that there could be some economic consequences not to spend money in that situation. So it could be budget minus actual, actual minus budget, but wherever you are standing or wherever you are coming from, you have to know whether you are in revenue or you are in expenses and how the interpretation should be done. So that is the idea about that. Let's see, I'm getting another comments coming up here. Please go through PIFA module. You can find a video on the channel on PIFA. Maybe I may not have time to go through the whole of PIFA. There are certain things, if you ask, it's a whole thing, so I can't have time to go through, but there are videos, or there is a video on the channel on PIFA. Last semester, I did a whole video on PIFA. It's on the channel. You can check the Public Sector Accounting and Finance channel and watch that video on PIFA in that case, because I cannot go through the whole thing. This is a Q&A that I'm answering specific questions in that situation. Yeah, Timothy, your hand is up. Whatever question, you can bring it up.
Yes, sir, good evening.
Yeah, good evening.
Sir, good evening.
Yes, good evening.
Sir, please, revaluation PSA, is it different from the one in AFR?
What do you mean?
Because we know that when they said they value the thing at the end of the year, that one becomes the value that you have to compare the carry amount with to see whether there's any revaluation gain or the amount to the carry amount and charge the depreciation on the total of them.
Relax. I don't know who is chasing you, but your line break. We didn't hear anything, so you can start again from revaluation at the end of the year.
Okay, I was saying that in FI, we know that when there's a revaluation, we put that one as the closing balance of the asset. Then we compare it with the current amount at the end of in our book. Then compare and see whether there's any revaluation gain or loss. But in this one, when they say there's a revaluation, then they rather add the revaluation in our book. Then they rather add the revaluation to
the carrying amount, standing the carrying amount.
They rather add a revaluation to the carrying amount in the book and charge the depreciation on the total.
Which book is that?
The manual.
Relax. Maybe you're not seeing well. Go and get some water to clean your eyes. Maybe you're not seeing well. So if revaluation
there is so much mistake in the manual.
Okay, so relax.
So let's getting you confused.
So let's deal with it. So you are saying that revaluation was done at the end of the year. And
yes.
So if revaluation is done at the end of the year, meaning that is the figure that has to go to the statement of financial position, isn't it?
Yes. Yeah.
So you are saying that that is not what they did.
Yes, please.
What did they do?
What they did was they added the revaluation to the carry amount in the book, like the balance brought forward plus the